Welcome to our discussion on the Industrial Select Sector SPDR ETF, also known as XLI. This exchange-traded fund, or ETF, provides investors with exposure to the industrial sector of the U.S. economy. The industrial sector includes companies that produce and sell goods such as machinery, transportation equipment, aerospace and defense, and construction. What is an ETF? An ETF is a type of investment vehicle that tracks a basket of securities, such as stocks, bonds, or commodities. ETFs are traded on stock exchanges, just like individual stocks, and can be bought and sold throughout the day. One of the benefits of investing in ETFs is that they offer diversification and are typically more cost-effective than buying individual stocks. What is the Industrial Select Sector SPDR ETF? The Industrial Select Sector SPDR ETF is one of the 11 sector ETFs offered by State Street Global Advisors, a leading investment management firm. The ETF was launched in 1998 and has since become one of the largest and most popular industrial sector ETFs on the market. As of June 2021, the ETF had over $18 billion in assets under management and a total of 77 holdings. The ETF tracks the performance of the Industrial Select Sector Index, which consists of companies in the industrial sector of the S&P 500 index. The index is weighted by market capitalization, meaning the larger companies have a greater impact on the performance of the ETF. Some of the top holdings in the ETF include Caterpillar Inc., 3M Company, and General Electric Company. How does the Industrial Select Sector SPDR ETF perform? Over the past 5 years, the Industrial Select Sector SPDR ETF has had a relatively strong performance, with an annualized return of 8.48%. This performance is slightly higher than the S&P 500 index, which has had an annualized return of 7.89% over the same time period. However, it's important to note that past performance is not indicative of future results, and there are no guarantees that the ETF will continue to perform well. The industrial sector can be affected by a variety of factors, including economic conditions, trade policy, and technological advancements. What are the risks of investing in the Industrial Select Sector SPDR ETF? As with any investment, there are risks associated with investing in the Industrial Select Sector SPDR ETF. One risk is that the performance of the ETF may be affected by the performance of individual companies in the index. If one or more of the companies in the ETF underperform, it could negatively impact the overall performance of the ETF. Another risk is that the industrial sector is subject to economic cycles and can be affected by changes in demand for goods and services. A downturn in the economy could lead to decreased demand for industrial products, which could negatively impact the performance of the ETF. In addition, the ETF is exposed to market risk, which is the risk that the value of securities in the ETF will decline due to changes in market conditions. This could be caused by a variety of factors, such as changes in interest rates or global economic events. How can investors use the Industrial Select Sector SPDR ETF in their portfolio? The Industrial Select Sector SPDR ETF can be a useful tool for investors looking to add exposure to the industrial sector to their portfolio. It can provide diversification and can help investors access a broad range of companies in the sector without having to purchase individual stocks. However, it's important to remember that the ETF should not be the only investment in an investor's portfolio. It's important to have a diversified portfolio that includes a mix of asset classes, such as stocks, bonds, and cash.